Happy Friday, everybody. I'm Jeff Hirsch, editor-in-chief of the Stock Traders Almanac, and this is WealthWise on Biz Talk Today TV. Today's featured guest is the venerable Peter Boockvar. I'll bring Peter on in just a few moments, but here's what's on my radar. Let me bring up a chart to show you, and we're off. So, if you remember, I used the phrase thrust but verify a little while back when we had the Zweig breath thrusts and the big advancer thrust from Lowry and the 90% days. And what we're seeing now here is that these thrusts have indeed been verified. You can see that we reclaimed several levels here. We went through this 5,500 level, the old W123 failed bottom that we had highlighted. Came through this uptrend that I've got going from April 24, August 24, and to the bottom of the W. In the process, we took out the 50-day descending, 50-day moving average, the pink line here, and now let's start to turn up. Then we danced around this 5670 number for last week and gapped through that and took out the 200-day, the top of the W, and then this 5870 number that everyone's talked about. And now today's close, not on this chart because we just closed. We're up at about 5950. We're through the election gap. Pretty much puts the new highs on our sights. And the other thing I think is important, not going to show this, but the VIX has been crushed below 18, which is very constructive. The May post-election year pattern that we've talked about, pretty much off the charts this year. Still on trend though. We get a little consolidation here in mid-May, and we're all look like we're back off to the rally here. So I think that's encouraging, and we should probably see continued gains. Maybe a little more consolidation after such a big gap. But then, we're going to ride this rally until Christmas in July. We have a little pattern, the mid-year NASDAQ rally from the end of June through mid-July, which we've experienced a lot in recent years, last year notably. Looks like this post-election year pattern, this relief rally that we're in, is really lining up with this running this up until the mid-July period, the Christmas in July. Then I think we can get some weakness here in Q3 with the seasonal weakness to Q3 post-election weakness, maybe colliding with some of the tariff pause timing. Look for maybe another correction here in the August-September week time period. Still kind of reminiscent of old school Republican post-election year weakness. We're back up into the green line, which is Republican administrations, all of them since 50, and the red line, which is the incumbent party loss trend. This is the year after the incumbent party loss, like we had last time. So this positive actions increased my outlook back to more 50-50 base case, worst case. If we can reclaim the February highs, I think we can get back to that 8 to 12% gains, makes that a little more likely. If not, the worst case of a flat to negative year remain higher. The relief rally off this tariff tumble has legs, so we expect it to continue through June and into July, but not without a healthy dose of chop. So that's what I'm looking at right now, and then I will bring in Peter. How you doing, buddy?
Hi, Jeff. Good to see you.
Good to see you, man. Peter is the Chief Investment Officer and Portfolio Manager at Bleakley Financial Group. This is a $12 billion management firm. He's also the editor of this cool Substack report. Well, I guess now it's on Substack. It's called The Book Report, aptly named, which I do look at quite frequently. Earlier, he was chief market analyst at the Lindsay Group. He was at Omega Advisors, a New York-based hedge fund. He was at Miller Tabak for like 18 years, equity strategist and portfolio manager there. I didn't know you were a DC grad. Did you ever hang out at the Exchange?
Yes, I think I spent half my life there. And
Yeah, I went to AU. Peter graduated from GW with a BBA in finance. That I just kind of realized that.
that's fine.
Do you remember the what they used to say at the end of the night?
At the end of the night, the exchange?
Yeah, well, when they put on the lights and send everyone home.
Yeah. What'd they say? I don't remember. I was probably
I don't know if
to
this is
remember.
appropriate for the podcast, but I'm cracking up over it. If you don't sleep here, if you don't work here, if
Ah,
you don't sleep with somebody that works here, then get the fuck out of here.
that's right. That's right. So that was there's a lot of good memories there.
Yeah, sorry, they just kind of came back to me here. Anyway, Peter, we've done a bunch of panels together. I've moderated you with some colorful folks like Peter Schiff and Mark Skousen. We've had some fun there down in New Orleans, different money shows, other places. Um, we've gotten to know each other. As you can see, we can have a good time. But you've always a voice, always the voice of reason on mainstream and social. But where did it all start? How did you initially get into the markets? Like, what was the epiphany? What was the thing?
Well, I actually wanted to be a sports agent before the Jerry Maguire movie came out. Before, so I went to law school for
That
a year.
turned you off to sports, or
Well, I went to law school for a year, thinking that that was going to be my path. And then that summer, after my first year of law school, I got a job on Wall Street just as a summer intern, and
okay.
I loved it so much that they kept me full time, and I didn't go back to law school.
Who
And
was the internship with?
Donaldson, Lufkin, and Jen Rett.
Cool. TLJ.
So in corporate bond research, so that's where I sort of had my first Wall Street job in about 30 something years ago. And I never looked back. And I watch Jerry Maguire saying that, I could have been that. But I'm pretty happy with the path that I took.
Yeah, you're still showing everybody the money, right?
So I'm trying to show clients the money. But every day is a different challenge when it comes to the markets. But watching you makes it a little bit more clear.
I appreciate that. So, CIO of Bleakley, what does that actually entail? Are you picking stocks, funds, dealing with clients? Are you building portfolios? What's your day like?
So we have about 55 to 60 different financial advisors, many in New Jersey, but in about 15, 16 other states. And you plain vanilla, pretty straightforward wealth management firm. And of client assets, well, I help run the investment committee and we help clients create or advisors create these portfolios. But I manage two particular strategies. One's a global macro and one's a income focused one. And advisors place some of their client money in my two strategies. So I take a macro and a micro viewpoint to investment management, portfolio management. So I'm doing everything from buying an individual stock to buying bonds to buying commodities, placing bets on currencies. So a variety of things which allows me to sort of widen my lens of investment opportunities.
Mhm.
And both from an asset class perspective, but also from a geographical perspective. So it forces me to follow a lot of different things.
So, just first off, the structure at Bleakley, you're dealing with just individual high net worth people or small. I mean, what kind of clients are they? Corporate,
Yeah,
just
a
regular.
combination of all that, 401ks, pension fund money, a lot of, I would say mostly individual money, both high
from the
net worth and,
from the Jersey
kids out of
area.
college. Nationally, we have advisors throughout the country.
Um, so when you're putting this perspective together, what's kind of like your process? I mean, I know I read a lot of what you talk about with economic readings and data points. I mean, top down, bottom up. How do you go about allocating or doing these strategies and picking stocks and that sort of thing?
Well, I do it the exact opposite of the way that you do it, in the sense that I look at the 52-week low list for my investing ideas.
What
Um,
what do you
so I'm
mean? That's what
looking,
we look at the lows.
okay, because I usually look at the worst looking charts for
We
my
have a
investment ideas.
strategy in the back of the book that Yale created called the only free lunch on Wall Street. That's picking new 52-week lows on mid-December. We do it the triple witching Friday in December.
Then we are on the exact same page. I guess I have a dogs of the Dow type viewpoint.
Mentality. Yeah, yeah.
And I look through things with a value lens. So that sort of gets me to find new ideas. I do focus a lot on the quality of the business as well, because the last thing you want to do is get trapped in a so-called value stock that ends up being a melting ice cube type business model. So I focus a lot on the quality of the business that is probably temporarily negatively impacted by something, whether it's a competitor or just an industry change or the cycle is running against or
Some
this
sort of
disappointment with
tariff
management
announcement or something.
or it could be tariff announcement exactly. So I'm looking for a good business that's temporarily out of favor. Now, it's not always looking at the 52-week low list, of course.
Right.
It's just having my eye on businesses that because I look at buying a stock as not just a symbol, a 3 or 4 letter symbol. I look at it as I'm investing in a business. Now that's from a very micro perspective, but on a macro perspective, I'm always looking for different sort of big picture trends where an industry has a particular tailwind for a while, and if I can buy a company within that industry that can sort of have the luck of catching that tailwind, even if it's not the best managed business or company, that it can sort of ride that wave. On the commodity side, I like to invest as well,
Uh-huh.
understanding that that's a very cyclical type of investment. But if you can buy cyclical stocks or commodities on the down cycle, if you can sort of time it when that cycle begins to change, just because these cycles tend to run in many year intervals, and be smart enough to know when to get out when you're sort of at the top of a cycle, because those down cycles in commodities can be rather brutal from a price perspective and also from a time perspective. But just constantly looking through like a contrarian value lens, but not contrarian for contrarian's sake. And that's how I sort of view the world,
Kind of
and always
more of a
skeptical of things that everyone loves.
more of a fundamental approach. Not you're not looking at tacticals as much. You're looking at not so much stories, but valuations and trends that are changing. So
Yes.
give us a couple of things that you're looking. Where are the good values right now? I mean, is it AI? Is it Bitcoin? Is it Brazil? Currencies,
So,
agricultures,
so I,
ags?
I I think I think the market is going through a major transition, and I want to sort of define major. If you look at the last 5 to 10 years, well, I'll tighten that up, call it the last 5 years or even 3 years. There were a couple of main drivers of outperformance, and we know obviously the AI tech trade
Hmm.
was a main one. But even before the AI tech trade sort of caught fire, we know that these big cap tech stocks just created incredible business models and rode this incredible growth wave.
Do you
Um,
look for those moats?
so that those were examples of moats, but I think we are at a major inflection point. And you
Hmm.
know as well as anybody that markets go through cycles, and that
Yep.
periods of 10 plus years of outperformance, the following 10 years tends to be sort of the baton is handed off to somebody else and another sort of form of leadership. And I actually think that the market is going through this transition phase. You look
From
from the AI, the Mag 7 stocks to something else. And I think that something else is going to be, well, domestically, it's going to be more value related companies, but globally, it's going to be international stocks and emerging markets. And that the outperformance we've seen in some European markets and
yeah.
in Asia and Latin America, this is not just a 1 or 2 quarter thing. This is potentially a multi-year thing. So when you look at just the S&P 500, one of the challenges that I think it has in terms of our performance over the next couple of years is that the Mag 7 became 35% of that index. And I think
Hmm.
we're losing that. I think the DeepSeek news was ended that tech trade. And
Sort of
even
a
fundamental,
canary in a coal mine.
yeah, and now when you think about the beauty of these businesses was just the asset light model and the enormous amount of free cash that they generated. But now with all this AI spend, these companies have become very capital intensive businesses. I mean,
Hence
take
the investments
Microsoft.
overseas in that we're just hearing on the news with AI and tech today, with Trump being over there.
Well, Nvidia in particular is benefiting from the AI spend, but the spenders, Microsoft's now a capital intensive business.
Yeah.
Meta is a capital intensive business. Microsoft stock peaked in July of 2024. Here we are almost a year later, and the stock hasn't gotten back to where it was. Google's business is now in question because of not only the breakup, but also, of course,
Search.
challenges to their search business with
Even though Gemini is
ChatGPT.
not bad.
No, Gemini is good, but if you don't have the click through to a link,
Yeah.
then they're going to make less money. If their market share goes from 90% to 80%, they're still dominant. But that's we know, Jeff, that stocks go that the transition from a growthy, expensive stock to a slower growth value stock, that is a long time transition. And I think that these stocks are in the process of making that transition. They're all good companies. Maybe the stocks still work, but in terms of really driving the equity bus, I think those days are over.
Is that why
So,
the small caps are having so much trouble also?
well, small caps I think are having trouble here because of the tariffs and worries about growth. Because the tariffs are really,
And before that, it was
particularly
inflation.
particularly challenging for a smaller business, that particularly if they're sourcing product overseas.
Right.
Um, so I think we have the end of the AI tech trade. I think investors are now finding and discovering international markets, which have been, left for dead for many years now. And you go over the last 10 years, you look at the total return between the S&P dominated by those names
Yep.
and the MSCI EPA index and emerging markets. I mean, S&P just sucked out all the energy. You look at the U.S. stock market relative to global market cap, it's gotten north of 65%. You go back 50 years and you can't find a number that high. So I think that the pendulum, the mean reversion pendulum, is sort of swinging in the other direction.
Across
Also,
the
I think
pond.
a major thing here also is
Hmm.
part of this. So I gave you the fundamental story for these seven stocks, but also you have a flows change. Foreign investors have piled into US assets for many years. And over the last 3 years, they piled into the Mag 7. The
Yep.
Mag 7 became a reserve asset class. Reserve asset managers, central banks, they own dollars, they own treasuries, um, obviously denominated in dollars, and they owned big cap tech stocks. Well, I think this trade war has made the world rethink their allocations to US assets,
Hmm.
particularly US big cap tech and US treasuries and so on. So I think some of this money is beginning to go back home. And this is
Hmm.
not just a 1 or 2 quarter thing. This could be a multi-year thing. So I think big picture major drivers of money flowing into the US, money flowing into these stocks is beginning to change. And it means that doesn't mean that there aren't going to be plenty of investment opportunities. I just think that it's not going to be in those seven stocks and that it's going to be another form of leadership, another set of opportunities that investors need to shift their attention to.
Is there any impact from the political leadership on this scenario, or is it above and aside from that?
No, it's a part of it because the administration has pissed off the rest of the world. And whether it was calling Canada the 51st state, or saying we're going to annex Greenland, or this whole tariff war. So investors are not only overseas are rethinking where I want to put my money, but companies around the world are rethinking where do I want to do my business.
Is
I
this
mean,
by design, or is it like they're out over their skis?
you mean the administration?
Yeah.
I think they got too cute here, thinking that everyone was just going to bow down to us. And I think hubris is the right word for
Pride
how they,
goeth.
they approach this.
Yeah. We used to have that a little walking on water indicator in the office about hubris. Yeah.
Yeah, so
So
I think, and arrogance is, when you are heavily reliant on the rest of the world for flows and for business, I don't think it's the right strategy to piss them all off.
yeah, it's going to make it hard to rebuild our own supply chain, and some of that is not rebuildable. It's just impossible.
Right. And even if we do to an extent, the price at which that costs, not only to do the reshore, but to run a business going forward from there makes us very less competitive in competing with companies of the rest of the world. Getting back to the hubris comment,
Yeah.
I try to remind people that the US will always be the dominant player here. We have the best economy, the most freest economy, but we can't take that for granted. and about 75% of the world's GDP takes place outside the US. 96% of the world's population lives outside the US. So to think that everyone's going to come here and want to do business with us, yes, of course everyone wants to do business with us because we're the biggest economy. But to think that they're not alternatives, I think is just a little too aggressive in thinking.
How does Bitcoin and crypto play into this? Is that something you look at all? Is that part of your portfolio, your strategy? It seems to be, you know, one of those sort of disrupting, innovative technologies that's sticking around and getting some legs.
No doubt, and I watch Bitcoin every day. I don't own it. I prefer to own gold and precious metals. I think that up until this point, Bitcoin's actually traded pretty well over the past month, but up to
Yeah,
the last month, Bitcoin is traded more like the Nasdaq. And
100%.
while it was meant to be a digital gold and was meant to be this finite asset, central banks can't print it. It is a store of value, blah, 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 blah. Well, okay, I understand that
It's
argument. And as a gold bull, I sympathize with that. I feel like you're my soulmate. Well, if you really want to be that sort of asset, then you should be trading more like gold, not like NVIDIA. And up until this point in Bitcoin's history, most of that history, it's only known zero rates, negative rates, and QE. That's all it's known up
yeah,
until a couple of years ago. So if it can start trading like gold, which if it wants to supplant
or
or complement
non-correlated in and
itself,
of itself.
yeah, then start trading like it.
Some of the research seasonal work I did on Bitcoin shows it was really, kind of like 4x the Nasdaq, just
Yeah,
more
exactly.
amplitude trading somebody, but it has seemed to decouple from that over the last month or so. I mean, that's not really a trend yet, but it's something I'm watching as well. So, um, I want to go back for a second. You worked with some heavy hitters over the years. I don't know how much time you spent with Larry Lindsley, but did you have any interaction there? Any stories or anything that you could share?
Yeah, Larry and I worked together. Well, he started his firm when he left the White House, I think in '01 or '02. And I joined in the summer of 2013 and I stayed there through 2017. So I had a nice amount of time working with him and it was a pleasure. He's one of the best people that I know. I still stay in touch with him and I learned a tremendous amount of not just what it was like the inner workings of the Federal Reserve, where he was a governor in the mid 90s, but
Right.
the goings on in DC as he worked for the George W. White House, and just one of the brilliant minds that I've ever met.
And then there's Leon Cooperman, the at Omega, the hedge fund, somebody who's charismatic. We see him out there. What was that like? Any did you have a lot of time with him, or was it a short run there?
So, for my own, well, due to my own voluntary action, it was a short period of time. Um, I only worked for Lee for about 6 months because
Okay.
it was not the sort of environment and culture that I was searching for as a good sort of
Not wholesome
background
enough?
for a job. So, Lee and I still talk every once in a while, and he's been a tremendously successful investor. It just wasn't the right fit for me, and actually, it was where I was at Omega right before I went to work for Larry Lindsay.
Right.
Um, so it was a good transition, even though I enjoyed being on the buy side, and with Larry it was onto the sell side. It was a good experience for both for me on both sides. But now that I'm back on the buy side, I'm happy where I am.
And what's this OCLI this real estate thing that you're
Oh, that was I used to. It's
does that
actually
still exist?
and no, it's. I used to own some farms in Iowa, so I had a small investment partnership that bought farms in Iowa. Back in I
Should
call
have
it
kept them.
yeah, well, back in like '06, '07, in my constant search for investment opportunities, um, that's when like the commodity bull market was
Yep.
really started to get going, and I wanted to, with when you're looking at ag, for example, yeah, you can trade corn or soybean futures, and or you can buy fertilizer stocks, or you can buy deer, and I was looking just for other ways of sort of playing the ag
So land.
cycle. And I did it, and luckily I started to do some research on farmland, and Iowa State University has a big ag department and an enormous amount of information online. So I just started to do a lot of homework and looked at the history, and I was focusing on Iowa because me being, a Jewish kid from Long Island, not knowing much about farmland and farming techniques, I said, you know
It's new
what?
and exciting.
If I'm going to do this, I'm going to focus on Iowa. It's the biggest producing state of row crops in the country. I'm going to stick to central Iowa. So if I need to fly to Des Moines, because I can fly to Des Moines
There's some
and
great
focus
farms
on
down Long Island.
one of the counties. Yeah, yeah, I guess you can. There's some wineries there. Um, so I did an enormous amount of research. There's a huge amount of history in terms of farmland pricing going back 100 years. And I flew out to Des Moines. I Googled farmland real estate brokers and hit on one, Mark Gannon, who's still doing it, and met with him and put together some investors. And we bought a farm, leased it to the Jensen family, and then soon after bought another farm and then bought another farm and paid about $5,000 an acre at the time. This was in central Iowa, high quality farmland, and high quality is defined as the yield, or sort of the amount of bushels it can produce on a per acre basis. And farmland in Iowa. I'm sorry if I'm giving you too many in the weeds
No,
details.
this
No
is
pun
fascinating.
intended.
Go ahead. Did you
In
make any
Iowa,
money on these deals?
well, yeah, I'll tell you in a second. So farmland in Iowa has something called a corn suitability rating, and it's basically measures the productivity of the land based on the soil type. So I tried to focus on higher quality farmland because I figured it would be easier to sell, it would be easier to lease. So I paid about 5,000 an acre, and then in about 2011, 2012, sold them for about 11,000 an acre. And
Okay.
um, my first lease, and usually leases in farmland are only like 1 to 2 years. My first year to the Jensen family, the first farm was leased at $232 an acre. And by 2011, it was being leased at over $500 an acre.
So you did well there.
So yeah,
Why'd you
did
leave?
okay. Yeah, I've been wanting to get back in, but pricing has been stubbornly high. I mean, the
Somebody
price of
bought
high
up a whole lot
quality,
of farmland out there. Was it
yeah, I mean, the price of high quality farmland in Iowa right now can be, 13 to $15,000 an acre, and that's with corn being
Mhm.
around four. Corn goes back to six, and you'll see, $20,000 an acre.
So politics. Wild times. Are we gonna get this big, beautiful bill? Um, is that happening?
So the Republicans will absolutely extend those expiring tax cuts,
Do they have the
100%.
votes?
The problem, though, is how it is so-called paid for. How much are they not going to pay for? Um, a lot of the
Some of
details need to be worked out, but
you're in New Jersey now, right?
yes.
I'm in New York. Some of our representatives are kind of thorns in the side of this thing with the salt tax. I'm not sure uh, everyone else out there in the world realizes what that means, the level of property taxes we pay in the New Jersey area. But it seems like the thing. I know my rep's been on TV a lot, Mike Lawler, and um, I think it's got a potential to hold it. Will those guys even vote to extend it with the $10,000 cap, the salt cap?
No, it's going to have to be expanded because they know if there's no extension of the expiring tax bill, then the salt deduction goes
Goes
back to
away.
the way it was.
Yeah, yeah.
So they do actually have some leverage here.
I think so. It's a small little group of them, a small caucus.
Yeah, and they really matter. And so I do think that they're going to get some of what they want, not all of what they want, but even if they raise the cap, then there's talk about it's only going to apply to people up to certain incomes, and then it's going to
And then
fade or
there's
whatever.
the poison pill, right?
Yeah, like I mean, for me. not being able to deduct is double taxation.
Yeah,
It's ironic that those that don't live in these high tax blue states that are saying, oh, well, your state has to get their shit together,
yeah.
and don't complain. Well, this is the same person who whines about the double taxation of dividends, for example. The dollar of income that's taxed twice. You know, you know, uh, I just don't think
Can't we just
philosophically that's a good
simplify the
idea.
whole? We had this discussion in the office. Can't we just simplify the whole tax structure?
No,
It's impossible.
that's incompatible with a government such as Washington, D.C., or any government for
It's
that matter.
impossible
There's no such thing as simplification.
because then they won't have jobs, right?
Yeah, and it's just nothing that would ever come to be. When you think about um, the possibility of getting real stuff done, would have been now, and they're having difficulty even with that. I mean, you take the Medicaid portion,
Hmm.
that was sort of a big piece of cutting spending, and it wasn't just okay slashing Medicaid just for the sake of it. It was specifically focused on, Medicaid used to be this um, health insurance
Hand
policy
up.
for lower income people, and then it's become more of just a welfare check for able-bodied people
Yep.
with no work requirement. So asking for a work requirement, and people's heads want to explode, so if they can't
We're
even
not there.
get
We're
that,
not there
then
yet.
then we'll never get control of debts and deficits, and the only way that we will is if it's forced upon Washington, and I define that as a 10-year yield of 6%. You get a 10-year yield of
Well,
6% because the world revolts against what we're doing here, then maybe you'll garner some attention.
how did we do it back in the '90s with Clinton and Gingrich?
Well, you had on the spending side Gingrich, which obviously, well, first of all, Clinton then would be a Republican today. Let's get that straight. In terms
Can we just
of
be centrists?
so yeah, so he would have been a raging Republican today
Really?
with what he sort of talked about then. But then you had, yes, Gingrich that kept the reins on spending. You had less defense spending because the Cold War was sort of waning down. So
That
big
helped.
drop in defense spending. And then you had all the capital gains tax receipts
Right.
coming in from
Dot-com
the
boom.
tech bubble.
Yeah.
So Clinton sort of got lucky. He got lucky that he met Newt. He got lucky that the Cold War ended, and he got lucky that he presided over a tech bubble.
He also tacked to the center quite
He did, and
strategically
Newt brought him
after
there
the
for sure.
midterm. Yeah,
Yeah,
say again?
yeah, Newt brought him there after the midterms.
Yeah,
Exactly.
exactly. Maybe we'll get that in 26. So, Trump administration, have we seen anything like this before? Is it any different or better or worse than 1.0, or is it the same thing and just take him at his word?
Well, we know his style is this. This was his style. A lot of bluster for sure, and breaking things, and promising to rebuild. Putting aside him itself, I think because there are a lot of other people around him that
Yep.
believe in the same thing. We talked specifically about trade and
Hmm.
tariffs. I think there are a couple of things. First of all, the idea that a trade deficit is bad makes no sense to me. Um, I just got my hair cut, Jeff, and Nicole,
Lucky you.
and I now have a trade deficit with her because I paid her money. So she's got a trade surplus with me, but I didn't get ripped off. I think she did okay. She didn't miss any spots. And
That's pretty even.
my trade deficit with her in services, I don't think is a bad thing. So this idea
She's never
that,
going to buy anything from you.
right, so I'm always going to have this perpetual deficit with her, but she's not ripping me off, and I am not poorer because of that. I got what I wanted from her, and she got what she wanted from me, and that's income. And I think we both benefited. Walmart, and let's talk about the good side.
Yeah, I wanted to ask you about your comments on Walmart. Thank you for
Yeah,
bringing that up.
Walmart employs 1.6 million people in the United States. I think maybe outside of Amazon, it's the largest private sector employer in the country. And they get a lot of product from China. They have a massive trade deficit with China, but China's not ripping Walmart off. Walmart became hugely successful with everyday low prices, enabled by their ability to get quality products at a cheap price from Chinese vendors and from US companies that sourced their products from China. So, according to Trump, well, that's a bad thing. Now, on the other hand, I understand the desire that we lost a lot of manufacturing jobs. I know there's this China derangement syndrome that China
Not to
and
be confused with TDS.
yes, the WTO when China stole all of our jobs and NAFTA, that sucking sound and everything. And I understand that. I understand if you were a manufacturing worker in Ohio and your plant closed down. I understand that. I understand the desire that we should make more things here. I understand that we exposed ourselves to the threats of relying on crucial things with China, on pharmaceutical ingredients and materials and equipment that go into US defense, and the Chinese that steal our IP. I get that.
But
But the
cheap
way, but
T-shirts and
but
socks
these are
are
these
not a
are these are
problem.
all like all a bunch of different things. Yeah, we're not making wire hangers in a factory in North Carolina anymore. We're not making T-shirts in North Carolina anymore. It's just not going to happen. Trump that is railing now on Tim Cook for making more iPhones in India. We're not making iPhones in the United States. It's not happening because there is a balance where you need to have low cost trade outside the US that we import here that benefits us. And the US has a lot to blame too. We have a very low savings rate. We spend too much money. We consume too much money.
Yeah.
We've relied on cheap credit for way too long. And that is one of the reasons why we have a trade deficit too, because we just spend like drunken sailors relative to what we produce. So a deficit or a surplus is more a symptom, but they're sort of attacking the symptom, thinking that's going to somehow cure
What's
the
the
disease.
solution?
And I think that the execution here was just totally bungled and arrogant and hubristic, if that's a
Hubristic.
word,
It is.
in what they and the approach that they've taken. And you know what? That small business is now on the brink of extinction because even though they lower the tariff on China to 30%, 30% may not be enough. So we're going to sacrifice all these small businesses on this because he just started throwing out
So what's a
tariff
better
rate from China.
solution? What's a better way to do this?
Okay, one thing I give Trump a lot of credit for was cutting the corporate income tax rate from 35 to 21%
Uh-huh.
to make U.S. Businesses much more competitive with the rest of the world. Let's focus on lowering that to 15%. Let's have that rate lower. Ireland became a manufacturing powerhouse because of a 12.5% corporate income tax rate.
Like the empire zones in New York State and other places where you give companies zero tax for a while to come in there and create jobs and generate business
Yeah,
in the
lower the
state.
cost of doing business in the US, deregulate, ease the access to permits, make us more competitive from a policy perspective, rather than raising the cost of imports and trying to kill your competitors to think that that will help you.
So
And
better off with lower tax policies internally instead of raising taxes on foreign countries.
yeah, and I mean, when you think about like building a factory in the U.S., building a pipeline, and going through the permitting and dealing with the environmental lobby that doesn't want you to open it up in somebody's backyard. I mean,
NIMBY.
we've done a lot of sort of damage to ourselves in terms of global competition, and I don't think this is the tool that should be used to fix this, and that there's more risks and downside to it than potential benefits. And to take it one step further, let's just say in Peter Navarro's perfect world, we build fully vertically integrated a complete automobile in the US. And he said it on CNBC. I want to build the transmission here. I want to build the tires here. I want to build the engines here, in addition to assembling it all here. Well, what's the cost of building that car here? How is a US manufacturer fully vertically integrated going to compete with the rest of the world? It's just not going to be possible. So we're going to have a car that an American buyer is not going to be able to afford, and we're going to price ourselves out of international markets. And if I'm a US manufacturer, rather than making cars in the US and shipping it overseas, well, if I want to do business in Europe, I'm just going to build factories in Europe because I'm going to be able to do that cheaper than doing it in the US. And if I want to sell cars in Asia, I'm just going to build out Asian factories. So I'm not going to be adding any US jobs.
So we
So
should we just wait this out until the midterms?
So I don't even think it's going to take that far. I think that once the tax bill passes in whatever form it's in, and I think that a lot of the support that Trump has had within his own party come January 1st, because that tax bill will get done well before that, hopefully this summer. Um, that sort of forced support for anything that Trump says and does, a lot of these people start looking out for their own and they start thinking about, yeah, November 2026.
Hmm. Yeah, I think I I think time is running out there.
But he's potentially a lame duck come January 1st, 2026.
Potentially.
Potentially.
Yeah. Even with this tax bill, I think he's got some issues with the salt stuff that we mentioned. So, let's talk about the economy a little bit. You spent a lot of time analyzing that. You think you're saying that rates up above what 10-year above 6% would help us get our fiscal house in order. Where do you think they're actually going to go? What do you think of the Fed and how they're handling this?
Well, it would destroy our finances by getting there because the interest expense in this country would go through the roof.
Then we get our real
But
recession, right?
it would be that my point was that would be the crisis to get Washington to really get control of our debts and deficits. I'm hoping it won't happen, of course, because that would be a sort of a nightmare scenario if the 10-year yield sort of gapped up. But so it would be the crisis that would get us there. In terms of the economy, there are three areas of strength. It's been government spending, it's been upper income spending, and it's been anything related to AI spend. The rest of the economy is relatively weak. Lower to middle income spending is weak. Manufacturing's been in a recession for 2+ years. The housing market is essentially frozen. Global trade is relatively muted. The pace of firings has been very low, luckily, but the pace of hirings is slowing down. So the economy is very vulnerable and fragile to any slowdown in the pace of government spending, which government spending is going to get cut here,
Yeah.
or at least the rate of spending increases are going to slow. So that's going to have a negative GDP impact. The upper income spending, a lot is going to depend on where the stock market goes. So Jeff, when we lose that wealth effect for whatever reason, if the S&P starts to retest 4,800 and we break below and we don't quickly snap back with a V bottom, that's going to negatively affect upper income spending if it happens. And then AI spend has been very robust, and the hyperscalers are still planning on spending this, very robust amount of money this year. But at some point, that rate of change is slowing down, and that because capital spending, and I forgot to add this, capital spending ex AI has been very flattish. You look at non-defense capital goods ex aircraft, which actually includes AI, over a 3-year time span, in nominal terms, it's up less than 2%. So to me, the economy is not on firm foundation. It's only on three pillars of growth. So we need to keep our eye on those three things in terms of this debate about a recession. And I do want to say again that whether we have a recession or not could actually depend on where the stock market goes because they're tied at the hip. On one hand, the stock market is discounting what they see in the economy, but on the other hand, if the stock market breaks, that will negatively impact the economy.
Did you happen to catch my opening salvo with the post-election year pattern and the tendency for post-election years to be weaker under Republican administrations because they shake up a lot too much too fast, and this administration is doing more than most or more than we've seen in a long time? Is that dovetail with your cautious stance here?
Yeah, because they're real threats to economic growth. Capitalism needs to be left alone. And politicians just seem to not be able to take their hands off it, wanting to sort of craft their own world. And it typically happens on the left, And all of a sudden, it's now happening a lot on the right. And if they would just leave us alone.
I'm gonna start wrapping up here because I know you got to get somewhere. Where can people find out more about you, your book report, and Bleakley? Is there any particular place that you want to send them?
So on my daily writings, they can check me out on Substack. You can type in my name, and I title it The Book Report, Boock, report as a play on my last name.
Yep.
And on the wealth management side, they can learn about us at bleakley.com, even though we are changing that name soon. But I can't mention it until it actually happens.
Are you gonna be anywhere fun or interesting coming up soon? Anything on the schedule on the calendar?
So I am headed to Milan, Italy in July to see Springsteen on the last night of his European tour.
What about a dead show in your future? Any of those coming?
So
You go to San
unfortunately,
Francisco?
oh man, would I love to be there. But that might be tough. I did miss, I saw them at the Sphere last year and an incredible experience. I did miss them this year, unfortunately. My son did get to go, and unfortunately, I missed it this year. But what a special experience that was.
Sure was. I was there. Listen, man, I'm gonna let you go. It was really fun chatting with you. We got to catch up more. So again, thanks, Peter. Thanks
Thank you,
everybody
Jeff.
for joining me. Again, I'm Jeff Hirsch for WealthWise on Biz Talk Today TV. If you want to find out more about me, you go to stocktradersalmanac.com. You can like and share this video or podcast if it does something for you. And we'll see you next week. So happy Friday, everybody.